Hi, everyone. I have here a fantastic panel to discuss with the challenge banks should be aware of when it comes to fintech. I'll do a very quick introduction. My name is Minty, as Simon said. I work in the international tax and transfer pricing area at RSM. I've got here Chris from Virgin Money, followed by Clayton from MoneyMe, and Michael from Revolut, and of course Dom from App. So, should banks worry about fintech?
Yes. Yes.
It turned out that the statistics actually supports that. So in preparation to this event, I looked up, the sort of the growth rate in that industry, etc. And globally, it's been growing by 26%, right? So currently, it's around $100 billion market size globally we're talking about. But within about 6 or 7 years, it's expected to hit the $1 trillion. Similarly, in Australia, it's been growing by about 20% every year, and that's actually data obtained from FinTech Australia. And what they're saying is that back in 2015, it used to be about a $250 million industry. Currently, it's a $4 billion industry. So that's the sort of growth we're seeing. I guess without further ado, I will ask the panels to share with us their experience and wisdom. Chris, I appreciate that you and Don are the ones closer to the bank, as opposed to Clayton and Michael. So a question for you is, do banks face existential threat from fintech companies?
I think that's going to be a Jekyll and Hyde answer here. I think, so first and foremost, yes, because you should never be insular and think that you can solve everything. But what we also got to recognise is that financial services in Australia is a highly regulated market. And you just need to look at sort of where fintech has gone over the last sort of 3 or 4 years. And we see, Volt has recently, unfortunately, folded. We've had 86400 sold into NAB. We had Zinja not be successful. The profitability of Afterpay and the buy now, pay later ones are being questioned. So the answer is yes, you should always be fearful of a threat coming from outside. But it's a capital intensive business. And if you're operating outside the capital environment, then can you gain market share if you're not running both deposits and lending? So always be fearful of what's to come, whether it's a small fintech or whether it's big players like an Apple, a Google, or something becoming a fintech. You don't need to be small to be a financial technology firm, but.
The answer is yes.
Yes.
All right, okay. Well, Michael, in light of that, Revolut is one of the unicorns of fintech. What is the secret there for it to grow so quickly within such a short period of time?
Yeah, I think there's really 3 things there. So one is we're focused on an identifiable customer pain point. So, Revolut started 7 years ago, and the express aim was our founders identified that consumers were being ripped off on FX margins and international foreign currency transaction fees, and wanted to really hone in on that. And the banks were just not interested in wanting to deal with that. They felt that they were making plenty of money on that. So we launched into that. And consumers got really excited about that. So our proposition is about, we're going to make it better, provide greater value for you, and built out from that. And we actually didn't really see the banks really respond at all and let us grow there. So that was one, focusing on the customer, focus on a pain point, and then rolling out additional products and features very rapidly. The second thing was, I think, as a fintech, I think we're much more in tune to adapting consumer behaviours. So what we learned there was that the consumer was very open to using an app-based solution to satisfy their financial needs. And so we doubled down on that, and we built everything out as an app going forward. And banks will still try to work through across a whole range of other channels because they're legacy around that. So we've extended from that initial proposition into a whole range of things: stock trading, commodities, etc. And the third thing is the technology. So we started as a fresh organisation. Our co-founders are hands-on CTO, very modern tech stack, able to move very fast, take advantage of everything that's available. And we learnt very quickly that the existing banks just don't have the capability to respond, not just because they have a legacy tech stack, but they have legacy thinking as well. And so we've been able to then rapidly expand, and we now have 22 million customers globally in 7 years.
That's a significant size, 22 million. Don, you have had a couple of startup businesses here in Australia, unlike Revolut that actually came from offshore to the Australian market. What has your experience been in the past, and in terms of challenging the banks? And we understand that you've had partnerships with Adelaide and Bendigo Bank. Can you share with the audience what that journey has been and where you see it going?
Sure. On the first question, I'll just add to what we were saying, is that I think there's not an existential risk. There's a risk, and it might be overstating it to say that, but banks are disrupting themselves as well. Mm-hmm. Like every major bank in Australia, and most of the mid-tiers, have a strategy to work with fintechs or to have their own venture capital fund or to have their own innovation lab or whatever. So I just wanted to make the point that co-opetition, where we compete but we also collaborate, is probably a bit more of a mantra now than just a pure competitive play between the big banks and the small fintechs, for example. In terms of myself, I've been involved in businesses sort of all over the world, but here in Australia, founded a whole bunch of different businesses, but two that you might know, Ferocia or Up, and then Pin Payments is another one. Actually, both of those businesses wouldn't exist if it wasn't for banks. So in the early days, the banks were our customers, and then at Pin we partnered with NAB in order to do, first, it was the first all-in-one payments platform in Australia. So it's like Stripe, but for Australia, before Stripe was here and before Braintree and others were here. And so, Pin was innovating. Basically, the idea was to fix payments in Australia, but to do that, we needed to work with the banks. And then same with Ferocia and Up. Ferocia started out working with two of the major banks and the largest credit union in Australia before we worked with Bendigo. And so there's four banks, two of them big and two of them medium. And we derive revenue from those relationships, but we also help those banks to innovate and build technology. And then we entered a joint venture to create Up, and Up is the best bank in the world. Sorry.
Up's a very good transaction account.
Yeah. So we've got they would like to have a bit of rivalry. We've recently announced our home loan product, and to the point about the other Australian neobanks not making it, is that Up is not a big profitable bank, right? We started with transactional and savings products and payment products, and what we've now done is announce the other side of the ledger, and we're going to start generating a margin. And I think we could build, if not the fastest, one of the fastest growing mortgage books in the country. And that gives us the ability to leverage those deposits to create a margin. And what we'd like to do is take Up from being everyone's favourite bank to being the bank that can actually help you buy a home too, and a profitable business. And so I think that is more of a threat to the big banks. And now we're owned by Bendigo Bank, so we'll help Bendigo. They're already number 5, but we can help them maybe make a 5th pillar. Yeah.
Excellent. Lots of exciting stuff there. Clay, to you, in terms of the partnership Dom talked about with the banks, etc. Recently, I actually read an interview you did with the AFR, where you've said that you're actually taking market share from the banks, yet you're also, in the meantime, you're working with them.
All day, every day.
All right. How is it going to work for us, right? We thought FinTech was going.
This is not up, down transactions. I don't know what these guys are talking about. There's an energy. And the consumer, 9 years ago, this 23-year-old wanted something different. This 23-year-old didn't like paperwork, didn't like all those things that we used as marketing campaigns to get them interested in a new way of getting access to credit. That 23-year-old is now a 32-year-old that is the prime bank customer. And they were financially born in the time when a business like MoneyMe was created, providing faster digital services. Now that we have car finance, personal loans, credit cards, that 32-year-old, that generational change has created so much momentum for us. It's not about anything, it's about the power of the consumer and their shift. Now imagine that consumer in another 10 years' time. What's happening with banks and the dismantling of how banks have held this consumer for so long, it's happening, and it's not because of necessarily us. We're at the right time servicing a changing behavior of customers. Okay? Now that's happening. When you think about our business and the ability for us to attract talent, we're winning over technology talent, marketing talent, operational talent that's giving us the advantage to execute with such precise ways that we cannot even imagine a bank trying to replicate. When we launched our blockbuster product, AutoPay, it's one of the fastest fundamental success stories of secured asset finance in Australia. We launched that in 3 months. For a bank to go through a transformational program and to put digital processing, facial recognition, fast payment processing, which they've been doing for 30 years of 8 days. You go into a dealership, the car's available, it takes you 8 days to drive that thing home. On AutoPay, our fastest transaction time for somebody to drive their car was 20 minutes. On average, it's 60 minutes. That's from the time of completion of everything to the point of putting cash in this dealer's bank account for them to go and buy another car that solves for this whole cash drain of society. These inefficiencies are way beyond these smaller increments that we've seen. It's the consumers that are valuing time and time efficiencies that's winning us over. So the energy and the change is happening, and the power of the consumer is what's happening. And so of course we're going to disrupt banks because of the consumers driving the change. Now, whilst, my friend over here talks about all these other failed attempts, of course, we're entrepreneurs. We're supposed to not succeed at everything. But go and tell me how many banks have failed internationally and waved the white flag. Coming to Australia, waving the white flag and leaving. So there's more of those than there are Zingers and failed vault, kind of businesses. And of course, we feel sorry for how those business models didn't quite make it. But there's equally the number of failures from the big institutions here in Australia. And guess what? Let's take one industry, AutoPay. 2 of our major banks have waved the white flag because their technology is not adequate enough to meet regulators' intentions. Westpac, the largest incumbent in Australia that has owned $16 billion of our money in car finance. Macquarie Bank, both of them last year waved the white flag. So there's as many success stories as there are, non-success stories, and it's not just fintechs that are falling on the wayside of banks. And trust me, that power of that consumer is strong. But the power of the staff is even stronger, because I tell you what right now, these guys, these high-tech talent people would rather go and work in his business and my business than go to some other traditional draconian business that actually can't make a difference. So imagine what 10 years looks like.
Fair enough, excellent points. But I guess, for those of us from the outside looking at, what is stopping the banks from replicating what you're doing? I mean, after all, the vast majority of Australian banks are resourceful, they're large, they're highly profitable. So what is stopping them from replicating what you do? And if they do that, then what is the sort of strategy the fintech companies can adopt in order to remain competitive?
Not to talk about the obvious analogy that we all use, Nokia, complacency, lack of innovation, lack of speed to respond to a changing consumer's behavior. Now they're irrelevant, but they are very relevant because they now provide wholesale infrastructure. If anyone knows telcos, they are incredibly powerful, Nokia. but they don't service the consumer directly. That's gone. Coming back is nearly, who knows, nearly impossible. Banks are shifting where they're fundamentally providing wholesale infrastructure to businesses like ours. Society One, which we're now part of MoneyMe, we have a bank account. We have a bank account where a consumer can open up digitally, put their money in, get earnings savings account. That infrastructure is shifting. We've got access to the same infrastructure that a bank has had with fast payment transactions, bank accounts, and more. So what we're finding in the participation of banks or collaboration with us is this attitude that there's wholesale infrastructure that's fundamentally important to servicing the consumer, and they don't need direct exposure to the consumer. And what's keeping them from being agile is they're the Queen Mary trying to turn and make U-turns in the Sydney Harbour. Like they're not designed to do that. These younger businesses, and we talk about tech, we build microservices technology. They got monolithic technology. Basically, you got spaghetti and you got something really clinical and proven for today's contemporary world. It's very difficult for them to turn that Queen Mary around in the amount of time that's needed. And they got caught sleeping. They got caught sleeping where Revolut's come in hardcore internationally, right?
Yeah, I mean, there's a great case study to have a look at is in Ireland, where, to Clayton's point, a lot of the banks there decided to not invest in retail payment capability and focus a lot more on more wholesale. We went in there with our offering, and we now have 25% market share of retail of the customers in Ireland. And people talk now about when they go to the pub and buy a beer, and they say, "Oh, it's my shout," and the guy goes, "I'll Revolut you later." And we brought, instant free P2P payments to that market because the banks chose not to invest in that. So there are all those examples around, and there's parts of that even exist in the Australian market, and that is primarily driven, to Clayton's point, by that's what the consumer wants, and we provide that solution to them.
Interesting, in one of the sessions I attended earlier, there was a comparison about the UK consumers and the Australian consumers as well as the markets. And one of the observations made was that how the UK market is actually saturated with fintech companies, whereas Australia, it's a growing, opportunistic market. Dawn, if I could bring you to this conversation in terms of, needing to do a lot more with banks from the way you started out, was it the wholesale infrastructure and the likes Clay was discussing that was the attraction for you? And also, if you could comment on how collaborating with them aided the creativity, the innovation paths for Up.
Sure. Yeah, look, it's not just Ferocia and Up either. Just by way of example, I think all the points we're making are good and valid, and what it's demonstrating is that it's a very diverse market, and there's no such thing as a bank. There's all sorts of different types of banks. There's franchise banks, and there's international banks and domestic banks, and so on. So typically when we're talking about competing with the banks in Australia, we're talking about the big four-pillar banks. But if you look at, say, Klarna, CommBank as a shareholder. If you look at Afterpay, NAB was a shareholder. And so it's not just my examples. In the market, there's a sort of this mixed entity that's created, and whether it's through wholesale funding, whether it's through access to the payments network, whether it's through funding directly or through a venture capital fund or whatever, I think that level of collaboration, we're going to see more of that. That's I guess, my prediction. The other thing is banks have some things that most of the fintechs don't have, including Apple and Google and whatever else, and that's the incumbency, and that can be seen as a negative, but it can also be seen as a positive. So, we're part of Bendigo Bank now, and part of the acquisition was to keep Ferocia and Up separate from the rest of the organisation, a lot for cultural reasons and a lot for process reasons, but so that we can continue to innovate. So I think that's fine, but we're very proud of being part of the group because Bendigo does a lot of social good. And so over the last 25 years, they've provided more than $300 million back into local communities in Australia. And I think that's something that most fintechs don't have the scale to be able to do yet, right? So I actually think that this combination sort of, I call, co-opetition or collaboration is actually going to be an important part of the landscape. And it's not just Australia, we're seeing it happen, overseas as well. So to me, I think that's just a few examples to illustrate the point that it's not my own lived experience, that's part of it. It's also the failures that I've been involved in along the way. So I've not just been involved in successes, but also failures, and I think that's sort of made us what we are today, and have that tenacity and sort of, you know, pushing through to become successful. But I do see that trend with more banks working with fintechs rather than directly competing against them.
Thank you, Joe. I guess, Chris, to bring you back to this conversation, is Virgin Money looking at partnering with fintechs? And you know, what's the sort of the strategy in terms of collaboration and et cetera?
I mean, so absolutely we are. And in fact, one of the fintech success stories in Australia has been Frollo and what Frollo has done. And we were actually one of the first parties to partner with Frollo. We did that back in 2019. And they've been part of the foundation of what we've been building in terms of the digital bank and the digital transformation for BOQ. So absolutely, we look at the fintech market. I mean, we consider ourselves a challenger into the big four, much as what Dom has said, and we all see that prize of taking market share away from the big boys and using our proposition and our technology to do so. And fintechs are an opportunity in that. As we say, they're a hotbed for innovation. You know, people will always come up with better things than what you do, and if you close your eyes to that, then you miss the opportunity. So, of course, our door's always open to talk to fintechs to see how we can collaborate and how we can deliver a fantastic proposition to customer. And I think that's ultimately where you've got to start, right? What is your proposition?
So I guess going to a related topic, where do you see the Australian fintech sitting from, you know, the global fintech industry perspective?
You're looking at me?
Yes.
You're looking at me? Look, you know, there's no doubt that one of the things that's a bit different in Australia versus, say, where Revolut's based in the UK is, you know, the venture capital market and the ability to raise the necessary funds to do that. So, you know, being based in London, we were able to access, you know, broader range of capital markets, and you know, and we've been quite good in getting our timing right in raising some of those. So we're well capitalised, and I think that will continue to be a challenge in this market. And you know, we've publicly said you know, if the circumstances are right, we want to get a bank licence. And if you move into that part, which Dom will know all too well around it, you know, the capital requirements around supporting a bank licence are pretty heavy. And so I think that will continue to be challenging for any fintechs that have any aspirations in that space around the access to the necessary capital to do that. But outside of that, I mean, you know, the technology now is it's a global marketplace, and people can access that and access talent when necessary to do that.
If I can just jump in, make a comment. I try to get involved in different fintechs all around the world. But in the US, for example, I think Cash App would be the largest, fastest growing sort of financial services company in the world. It's built in Melbourne. It's not available in Australia. So I think there's one question is the international opportunity. The other is leveraging the talent in Australia to be able to export that to the world. And we can make use of it ourselves at our local banks or in our local fintech industry, but we can also help to create that innovation and that spark and that disruption globally. We don't just have to limit ourselves to thinking about doing it locally.
We spent over 400,000 developers' hours to build a platform called Horizon. 400,000 developers' hours is no joke. What we created here is exceptional. The ability to process all forms of transactions, NPP is easy, decisioning for credit's easy, secured asset finance is easy, reaching customers digitally is easy. We're now close to our 1 millionth customer. But 400,000 developers' hours, and the banks are still yet to start their transformation programs. That's a long lead time that we've got an advantage over. So when you think about what is fintech in the future, it's the power of technology and the consumer changing behavior that's going to really be a catalyst for us. I'm excited. Like, I think in 10 years' time it's going to be called the Big Five. And I'm pretty sure MoneyMe is one of those Big Five. And it'll be surprising to see if those top four are still in there.
10 years.
I just want to add to that. Technology is always, we've been a technology company, a software company. That's what we did when we created it. And you know, one of the things we did was we spun out a business from our company, from PIN actually, which helps other businesses to deploy software to customers. And so Ferocia was actually the first customer, the first paying customer of that service. And now we deploy software on average more than 10 times a day to customers. And very few companies in the world actually do that in any industry. And so to be able to do that in the financial services industry, I think is really exciting. Upsiders look forward to all these new things that happen in their app all the time, and we're able to deliver that. That is very difficult for the big incumbents to do, and we've worked with several of them to help them with that transition, to be able to create that infrastructure, improve their culture, change their processes in order to be able to compete in that space. But for the time being, most people in this room that are in fintechs have a competitive advantage for sure.
Our first customer was a Commonwealth Bank employee, and he was 23 years old. And I asked, because this was our first customer, why did you choose MoneyMe? He said, the bank will take too long for me to get access to capital, and I've got going away on holiday, and this was just pre-Christmas. That was our first customer, a Commonwealth Bank employee that's got all the access and tools, choosing something different. That 23-year-old is now 32-year-olds, and they were even the Commonwealth Bank's employees choosing an alternative solution. That hasn't changed in anything, it's just gaining momentum. And there's lots more space for more names. And we're not all going to make it, but the ones that can get to critical scale in the right time, those are seriously formidable businesses that are going to take market share from some of the banks.
Thank you very much. I mean, this is a topic we would have needed half a day, not half an hour, Simon. But we're running out of time. But before we conclude, can I ask each member of the panel to share with the audience a takeaway message, in particular for fintech companies out there, because you have such depth, knowledge, experience, and wisdom. What is one thing you would like to say to them?
I'll just start. I might just have a fact and then some insight. So the fact is that it's 80% of the market is the big four banks. So whatever you're doing as a fintech, you're going to be winning business from the big four banks, right? It's just a fact. So it's not so much a sort of a nasty relationship or anything like that. It's just a fact. The second point is the talent that I've talked about. In Australia, we have an enormous amount of technology and engineering talent, and I think that we should work with the universities, we should work with the fintechs, we should work with industry organisations and leverage that talent, because that talent is what builds the unicorns of the future.
Yeah, 100%. I mean, that 80% comment is so pertinent. I don't know, we spend a lot of time when we're working what we do, and people say, oh, look at MoneyMe, what they might be doing or what Up's doing. We say focus is the big four have 80% of the market by any definition. That's where we will win most of our customers from. Stay focused on that, and that's actually something that we do nearly every day. I think the point I made earlier is just if you have a obsessive focus on solving a customer pain point and having a point of difference, so we called it taking our core proposition and winning a beachhead in Australia that we could win, land, and then expand from that. Stay focused on that and do that, because fintechs have the ability to pivot around and come back to it. So, I joined Revolut in January 2020, really excited to launch a financial services business in Australia, and then a pandemic hit. And the last thing people are worried about is some of the financial services things. So we had to pivot very quickly and then come back and focus on other things, but then come back. So, if you're a fintech in that business in Australia today, you take all of those lessons, you're nimble, you're focused on your customers, you can move fast, just concentrate on those things.
Agility is the word. Clay.
You don't need to go public. It's a horrible experience. There's now capital markets that will reward you being private. 4 years ago, that didn't exist. We had family offices really tightly held here, unless you had scale and proven track record, which we don't have, when we're early entrepreneurs. The capital markets today have shifted the other way. The venture capital, the private equity capital, the enthusiasm to invest in fintech is huge. Don't be frightened by public markets. I warn you, don't go to public markets just yet, because they don't discriminate. They don't discriminate whether you're flying or whether you're traditional. They just don't discriminate at this stage. So stay true to what the guys are saying, which is the focus being on participating in a monster ecosystem. But the availability of capital for anyone starting now, you are light years ahead of where some of us started 9 years ago, where it was very difficult. Your bootstrap is very different now, and there's a lot of capital for you to actually accelerate and get quick advantages, because businesses like ours are succeeding, and now they want to participate. So I'm very encouraged about what happens now, and that is the entrepreneurs here, and there's some private entrepreneurs here in the audience that we know, and have seen the early stages, Proviso, Bank. You guys remember bankstatements.com.au, where banks and everyone else was trying to shut this crew down, a small Adelaide group doing great things for the consumer. They're trying to shut them down, but guess what happened? All the banks started using it, and they changed their name. Now they all use bankstatements.com.au. Ilion bought them. The participation and the success stories are far greater than some of those failures.
Chris, the last word.
I mean, I'm going to go back to what someone else said before, which is focus on the customer. You can have the best technology in the world, but you've got a shit customer proposition, and you're not going to make a cent. And so focus on the customer, back that up with good technology, and you're on a winner.
Excellent. Thank you very much.
Thank you.
Yes, please do join me in thanking the panel members.